on what we're kind of calling a Fed Wednesday, but it's really an FOMC Wednesday because we get minutes in just a moment.
Yeah, they're going to be crossing the Bloomberg terminal any minute now. We're going to get the latest intel on Fed policy. This is the U.S. Central Bank releases the minutes from its latest meeting, its last meeting of 2024.
Yep, we're going to be reading the tea leaves, trying to get more clues on what we might get in terms of rate moves come 2025 this year. Because as you know, based on some of the economic data, the expectations have been changing. Let's head to D.C. Bloomberg News International Economics and Policy correspondent Michael McKee is at the Fed. Mike, walk us through the minutes.
Well, Carol, there are some hints in the minutes of what might come in the future. The president-elect isn't mentioned by name, but the minutes show Fed officials spent a lot of time discussing the possible impacts of his potential fiscal policies. Quote, almost all participants judged that the upside risks to the inflation outlook had increased, the minutes say. They cited recent stronger than expected readings on inflation and the likely effects of potential changes in trade and immigration policy, a phrase that appears several times in the minutes. With growth also stronger than had been forecast and the labor market showing no signs of, quote, rapidly deteriorating, a substantial majority of the central bankers felt it was time to move to a more cautious policy regime. At the current juncture, the minutes say, with its policy stance still meaningfully restrictive, the committee was well positioned to take time to assess the evolving outlook for economic activity and inflation. Participants indicated the committee was at or near the point at which it would be appropriate to slow the pace of policy easing. The minutes confirmed some of the 19 officials incorporated what they called placeholder assumptions to one degree or another about the effect of possible Trump policies. Others did not. A few didn't say. A majority of participants noted their judgment about the meeting's policy decision had been finely balanced. More than one said there was merit in keeping the target rate unchanged. Cleveland Fed President Beth Hammack, who dissented at the decision to cut, is the only one who was identified. So the minutes do lay out the possibility of a slower for longer path forward for the Fed.
Mike, I want to come back to you in just a moment because I'm curious to see what you think stands out based on our thinkings about the Fed and what they're going to do in 2025. Having said that, I do want to do a quick check on the markets because pretty much no reaction, very little reaction, I should say, in terms of the equity trade. The S&P was down about 9 points heading into the FOMC minutes, now down about 11. The NASDAQ 100, we saw a decline of about 38 points ahead of that decision, now with a decline of about 48. More importantly, the Treasury curve. Let's go there. The 10-year was yielding about 470. That's exactly where we're seeing it. Let's go to the shorter end, which is so sensitive, of course, to Fed policy and conversations and narratives. That 2-year note was yielding about 4.28. That's exactly where we see it. So not too much reaction. Mike McKee, you parse through, you actually read all these documents, go through it word by word. What jumps out for you in terms of what we've been thinking about less Fed moves this year? Is there anything in there that gives you some more clarity?
I'm not sure if it gives us a whole lot more clarity, but it reinforces the idea that the Fed is now going to slow down. We don't know exactly what that means for January, but the bet would be they're not going to cut rates. They'll hold at that meeting because the discussion of potential changes to trade and immigration policies comes up over and over again. It comes up in the staff forecast for what they think is going to happen. The staff slightly nudging up its inflation forecast for the coming year and citing some of this uncertainty about future policies. So one has to walk away from this saying the Fed has basically told us what they were thinking at the time of the last meeting is the same as they're thinking today. We don't know what's going to happen. Inflation pressures are still relatively strong, so we are setting the stage for not moving right away.
Inflation in the labor market certainly linked. We got a little bit of data today with the ADP jobs report. We're going to get the change in non-farm payrolls on Friday for the month of December. Analysts surveyed by Bloomberg say 165,000 to the upside. Mike, how does what you learned today change the picture or inform the picture about the labor market moving forward?
Well, there's a little bit more emphasis on the labor market in the minutes than a lot of people maybe had taken away from the last meeting and what we've heard from Fed officials since then. While they do say, as the minutes note, that there's not a sign of substantial deterioration, there are some signs that the labor market might be weakening a little bit. And the minutes say members agreed that it bears close watching. So they will pay attention to what happens. But it's inflation that gets top billing throughout the minutes, as it has in most of the members' speeches since then. And so we're really going to be watching next week to see what happens with CPI and PPI. And of course, towards the end of the month, when we get the PCE numbers, because inflation seems to be the lodestar for the Fed right now.
Hey, Mike, we did have Federal Reserve Governor Chris Waller coming out, a permanent voting member, and he said he believes inflation will continue to cool toward the central bank's 2% target, prompting some support for additional interest rate cuts this year. How important is Waller's voice?
Waller is seen as one of the intellectual centers of the Fed, and he is an important voice. He's basically said today that his view is sort of the central view among members of the Fed, that they do expect inflation to continue to cool, but he noted at a slower pace, and it still means that they can cut rates, but he didn't put any kind of time frame or amount on that. So that didn't represent really much of a change. The news in his speech today perhaps was that he was looking at the possible Trump policies and saying he didn't think at least the trade policies were going to be necessarily inflationary, because with trade and you get higher tariffs, you don't necessarily get higher inflation because it's a one-time move up in the price level, unless you have tariffs that are spread out over time or very large that could have an impact on inflation. And we don't know, and Waller said that today, we don't know what Donald Trump is actually going to do. So based on past history, it may not be inflationary, but you still have to watch and wait. The markets have obviously not reacted to the minutes, but pre-acted. We've seen rates go up as investors have kind of bet this is what the Fed was thinking.
Hey, Mike, a story continuing with Fed leadership and the composition of the Federal Reserve under the next administration, a story that got a read spike on the Bloomberg terminal. President-elect Donald Trump's advisors considering how they will reshape the leadership of the Federal Reserve, including elevating Fed Governor Michelle Bowman to be the bank's next vice chair for supervision. That's according to people familiar with the matter. Should we expect a very different Fed in terms of composition, in terms of policy, as a result of a Trump White House, or does the Fed remain independent, as it says in its mandate?
You're not going to see a whole lot of difference in the near term. There are no openings on the Fed until January of next year, when Adriana Kugler's term runs out. So Donald Trump can't change anybody who is on the Fed unless someone else resigns in the meantime. Michelle Bowman is a candidate to become the vice chair for supervision because she's a banking representative, has served as a banking commissioner back in Kansas, has a background in it, and has been deeply involved in some of the regulatory issues that the Fed has followed. But the president could also decide to leave that post vacant for now. Once Jay Powell resigns, or his term is up, rather, as Fed chair in May of next year, that's when you might see a difference be made, depending on who President Trump would nominate to be chair.
All right, Mike, so you get back home, you're in the newsroom. Tim and I are like bothering you about like what we should be watching. I mean, obviously we've got the Friday jobs report. I'm just curious. So now that we've got through these Fed minutes, how are you thinking about what you mentioned the inflation report next week, also later this month. A lot of data before we get to the first Fed meeting of this year, and certainly before we get to the second meeting in March. So I don't know, how are you thinking about where the Fed is right now?
Well, I think the Fed is kind of on hold at the moment, waiting to see, like the rest of us, what's going to happen. Obviously, we're going to pay attention to the inflation numbers next week. And then immediately, Donald Trump says on day one, maybe day two, he's going to start announcing all of these policies that he's talked about. The market will have to digest those and figure out what it means for the economy. But they're already at this point sort of pricing in the idea that the Fed is on hold for now and may not cut a whole lot in 2025. Because these policies could be inflationary.
All right, great stuff as always. Safe travels, kiddo. Bloomberg News international economics and policy correspondent Michael McKee outside the Fed with the breakdown on the Fed minutes.